So let's talk a little bit about settlement offers and like the negotiation strategy around them because I think people, lawyers, financial analysts, CDFAs, everybody that's in the divorce arena, they get hired by lawyers and there's a process. We go through discovery, we wait till we get all the documents, and then we start to analyze the statements and the business and the RSUs and the pension. And we take months and months and months, and we don't ever really focus on getting to a settlement offer. And probably only in the past couple years, and I've been doing this for like 20 something years, have I started to focus more on getting to a settlement offer faster than waiting for all of the relevant data. Because what I started to notice is that even if we waited and got all the data, and then we went to the hearings, and we went to depositions, and we went to trial, at the end of the day, we weren't getting a better settlement offer as time went on, but we ended up spending more like 20, 30, 40, $50,000 or more. And it's kind of because at the beginning everybody looks at your case and they look, well, you have a lot of property, or you have a lot of businesses, or you have a lot of cash moving in and out. And sometimes they don't see the debt, or they don't see the risks that somebody's taking. And, they're just looking at that this is a big case and we need to get all the information and we need to be as specific as possible. What I started to realize is that in mediation and even in negotiations, people weren't caring about the specifics of the numbers. They just wanted, like, what's your offer? What's my offer? And then let's kind of split it down the middle, right? Let's average them. Let's split the baby, is what we call it. And I was noticing that judges were doing it, mediators were doing it, and so like just splitting it down the middle, like averaging both of the sides. So that's why you see like experts and lawyers go really high or really low. But I started to notice that if people negotiated from the truth, like if they started to look at the financial picture and just accept some of the realities of the financials, like there's debt, it needs to be split, or somebody needs to take on more of the debt. The house doesn't always equal the business. That we need to get true numbers, and then we need to look at all of them just from a reality check, a rational viewpoint. And then at some point, you have to say, okay, I want the house, or I can keep the house, or I can't keep the house. Like, what do you actually want? Do you want to keep the boat? Do you want to have that rental property? Do you want the risk of that? Or, can you split the retirement? Can you still live if you don't have cash flow? All of these things I started to realize if we stop trying to go after the most that we can get, like what can I get in the court system, and we just start to accept the fact that we're going from two wage earners, or we're going from a one family household to two households, and it's not going to be the same. We're going to have to downsize. We're going to have to be more mindful of the money. We're going to have to figure out how we can split these things and still survive. I think that it started to take on a different perspective, that the faster you can get to a settlement offer and just start to negotiate. And even when you have a toxic spouse, they're going to just delay things in the court process. Like, they're not going to give you the documents. They're going to make you really work at discovery. Why? Because they're toxic, because they want you to spend a ton on an attorney. They want to cut you off of the money so that it puts pressure on you, right? They're going to try really sort of coercive control tactics in order to get you to concede and to agree to a settlement offer, because quite frankly, they don't want to give up money. This is why you see very sophisticated financial professionals. Like, if you're divorcing a lawyer or a financial analyst or an investment banker or any of these people, a business owner, like, they should know the money well enough to make you an offer. So why don't they make you an offer? Because they don't want to come off of that money. Like, they've been looking at the money, they've been counting their bank accounts, and they don't want to separate it. So you have to look at this at a different psychology, that you're making an offer, you're anchoring the deal, is what we call the guide, and you're putting forth your best offer so that you get their counter offer faster, right? They're waiting for you to put forth the offer, and you're like, well, I don't have all the financial information. How could I possibly make an offer? And yet, they do, but they will not make an offer to you. Why? Because their offer would be too high. They're trying to get a deal. They're trying to see you give a number that's going to be far lower than what's in their head. So make the offer, anchor the deal, put forth enough, get enough discovery, get enough information. And yes, this takes a creative strategist. This takes somebody like us coming in and saying, okay, what do you have? How can we look at this? How can we not do 5 valuations? Like, how can we look at this from a simple viewpoint? How can we start to put estimates of numbers in the property statement and just get a big picture? Like, what does this look like? Like, what is the range of reasonable alimony and child support that you should expect? And then you sit back and you say, okay, can I live within that range? Can I have a backup plan? Can I start to get trained in a new job? Like all of these things, then you can start to plan for your life after divorce. But if we don't give you a good picture of what is the property that you're going to keep, and at the end of the day, even if somebody says it's separate, even if there's money depleted, we make assumptions for all of that in the settlement offer. Like if there's money depleted, we'll put it back on the balance sheet as if they had it, right? They benefited from it and you get other assets. If we think that the business is worth something, right, from cash flow, from the assets of the business, from a reasonable market value, then we put that number on there. If we can put a number on the pension, the restricted stock units, we start to estimate what their income is, what your income is, what would be the alimony. Can you afford to refinance the house or assume the mortgage? Like all of those things go into the settlement. Like put together a parenting plan. What is your best parenting plan that covers some of the issues that you know are going to arise so that you don't have these complications in the future? All of these things go into the settlement offer. Well, we had 200,000 in this account and it's gone. Great. We're going to put it back on that property statement. Oh, well, there's $20,000 worth of cash missing. Great. We're going to put that on the balance sheet, the property statement. Like all of these issues that you have that like, this is not fair. We're going to account for it and we're going to put it over in an offer. It does not mean whatsoever that they're going to take the offer. It means that we're going to assume that we're going to split all the assets, not down the middle, but in a reasonable fashion. Like you keep the house, I keep the business. You keep the boat, I keep the motorcycle. And then at the end of the day, does it even up? And if it doesn't even up, then we're going to split the cash uneven. We're going to split the retirement uneven. We're going to split the investments in an uneven pattern, right? So that we can equal it out, so that you're not paying each other back and forth. You're not remortgaging the house. Like these are creative ways to get settled. And quite frankly, people are just not doing it. It's not the norm. So like, oh, I wish my attorney would have done this, or I wish I would have found you guys sooner. The reality is other experts and lawyers are not doing it this way, right? This is not the normal pattern to get to a settlement offer. They want to wait for perfection, and perfection costs you a lot of money. So the more you can just pull together some information, book a strategy session, or work with us on a retainer basis, we're going to come up with an offer very quickly, right? Probably for like the whole shabeel could be maybe $5,000. That's cheaper than getting all of these experts. And that could include a business valuation and a pension valuation and a restricted stock units. Like we want to take a precursory look at all of the assets so that you can have a better idea of how am I going to live and what can I do. And then you can choose what you give up. You can choose what assets you want. That's your best deal. That's how you anchor the deal. You can download our spreadsheets and get started on your own property statement, and then work with us and we'll do the finishing touches. We'll talk to you about strategy. We'll talk to you about negotiation, and we'll be there for the mediation if that's what it takes. But you need an advocate in your corner, and that's where we come in, but you have to do some of the work on your own. Look in the link in the bio and download and get started today.